So as you know that module A has a decent weightage in the overall marks distribution of Indian economy, Indian financial system. And when we talk about the most important unit of this module, that is module A, it will be unit number 4th. Why we are saying this? Because we have seen most of the questions which are repeated from this particular unit, they are having the marks in the range 4 to 6 on regular basis. So you cannot ignore this unit, a very very important unit indeed. And not only in your IE and IFS but in PPB also you will encounter the same topic, and along with that in RBWM also you will see the priority sector lending norms. So why not just cover the particular topic in IE and IFS itself, and later on try to revise in other subjects also. Alongside, we also have the MSME in Indian economy as a subtopic of this entire unit, which is again very, very important when it comes to government initiatives. We have seen in November 2025 examination that 3 to 4 marker questions have been asked from the MSME topic and pertaining to the government initiatives itself. So altogether, when we say the weightage of unit 4, it is immense as compared to the some other units which are not that important. So you must focus on this particular unit so as to secure good number of marks which are very easy to grab if you have the important updates included in your particular notes, right? So let's start with the definition, the simple definition of your priority sector, how it all started. First thing first, when we got independence since 1947 only, the government's aim was to develop our primary sector, which involves the agri and allied activities. Right? So when the government noticed a very huge contrast when we compare the primary sector with the other sectors of our economy, they realized that we do not have enough credit with us in the rural areas. And if you want to develop any kind of sector, you need what? You need money for that. And whenever there is a discussion of the people who are involved in various jobs in our agri, you can say in the rural areas, we will find most of them are in the agriculture only. So they also require money, they also need credit. So till 1950s, what they were doing, how they were able to, compensate for this deficit which was there in the form of less credit. So earlier people used to indulge with the private money lenders. They used to seek money from these private money lenders, and in turn these money lenders used to charge them with hefty rate of interest, fine, because they knew that there is no institutional credit source whatsoever in rural areas. So government noticed this, and ultimately it passed a particular, you can say, law in the parliament, and directed the RBI also to give certain measures, to suggest certain measures via which we can ensure the free flow of credit in the rural areas also. So government along with RBI, both these important bodies of our country, they sat together and finalized a list which is now known as the priority sectors of our nation. Right? Priority sectors. Mostly you will find the sectors include your agriculture, then MSME. Along with that, we also have the renewable energy now, then social infrastructure, plus housing, or for that matter, education also. Then we also have the export credit, which is very, very important. Lastly, the most important one being weaker sections category, which is having most of the population of our rural India. Find maximum population of rural India, you will find that they lie in this particular category of weaker sections. Alongside, we also had the others category, wherein the government keeps on updating various components. Okay, so ultimately when we talk about the idea of priority sector, it stems from the exploitation of private money lenders and culminating this particular idea into the institutional credit is what the RBI has done over the past 50 years. Fine. So when you talk about priority sector lending, it comprises only those sectors that have substantial influence on vast proportion of population, the weaker sections, and sectors that are employment intensive. So you will find today also in 2025, more than 50% of our working population, they are working in the agricultural sector. That is the reason why we say employment intensive sector. The current framework of PSL dates back to 1967, when the Banking Law Amendment Bill 1967 introduced the social control over banks in India. Must be knowing that 1969 was the year when the first phase of nationalization of banks occurred. So roughly when we talk about 1965, or for that matter the late 1960s, was a time period where government was very serious about the social control over the banks. So PSL norms, we will be learning about them, but first of all, let's go through the important sectors under the priority sector. So agriculture, MSME, export credit, social infra, housing, education, renewable energy, weaker sections, and other. These categories we have seen. And when we talk about the most important category, it is the weaker section. Why? Because here you will find all the uh, deprived, you can say, categories, or for that matter, derived societies who are present in our rural areas, like small and marginal farmers. So, small and marginal farmers, how we define such farmers based on the land holding. So, operational land holding is a benchmark via which we define the small and marginal farmers in our country. So when we talk about a marginal farmer, so that farmer holds the land which is less than 1 hectare. For small category, this particular range goes beyond 1 hectare but is limited to 2 hectare only. And in general, we say small and marginal farmers are those farmers having the operational land holding less than or equal to 2 hectare. Fine. Next is artisans, village and cottage industries, where the individual credit limits do not exceed 2 lakh. Again, artisans working in rural India, village and cottage industries mainly present in the rural India, and they have the credit limit which is not more than 2 lakh. This particular limit of 2 lakh you should remember, because this can be asked in the examination. They ask most of the questions from the limits only, right? Then we have certain beneficiaries who are present in the rural India, and mostly these beneficiaries, they are covered under the government sponsored schemes like National Rural Livelihood Mission, NRLM. You have the National Urban Livelihood Mission, NULM. Along with that, you also see self employment scheme for rehabilitation of manual scavengers, SRMS. More or less, these schemes, when we club them together, there is a single essence. The commonality between all these schemes is what? That they are redirected towards those people who are socially deprived. Fine, socially deprived. Then scheduled caste, scheduled tribes, that is also one of the category under the weaker sections. Beneficiaries of DRI scheme, the differential rate of interest, where we target the weaker sections and we provide loans up to 15,000 to a particular individual. The micro loans we can call them. Along with that, in DRI, you will also find that the people from SC/ST community, they have an additional benefit apart from this loan, that they can also have certain amount for home loan as well, some minor amount as the home loan amount as well. Then we have self-help group, joint liability groups in the weaker section. SHGs, the self-help group in our country, they are mostly having 10 to 20 members, and maximum of the SHGs, everybody knows that they are formed by women. And what is the mode of operation in our self-help group model? You have to maintain one saving account and inculcate the habit of saving, And when we talk about the group, as a group, what should you do? You should maintain the book of accounts. Along with that, must conduct the regular meeting. Plus, when we talk about the co-lending activity, if a partner, or for that matter, if an individual out of these 10 to 20 women, they need some amount of assistance, financial assistance, that whether you are lending or not to that particular individual. So all these things, if you are doing over a period of time, you will be having a basic earning in this saving account. Must be saving some amount, and based on that you can get credit as well. Why I'm telling you this? Because self-help group, you will be learning about self-help group in the upcoming modules of IFS also, and in PPB as well. Then we have joint liability groups also, which are more or less targeted towards earning profit. In self-help group, we need credit, the women need credit so as to sustain their livelihood. But in JLG, they want to expand their business. There is a thin line of difference. Next, we have the individuals and individual members of SHGs, JLGs, who are satisfying the criteria as prescribed in the master direction. So what you have to learn is that not only the entire group, not only the entire joint liability group or the self-help group, but also the individual members of these groups are also classified under the weaker sections category. Then we have the women beneficiaries who are having the loan amount up to 2 lakh per borrower. They are also included in this category of weaker section. The limit 2 lakh per borrower is not applicable to the urban cooperatives. So there is an exception for the UCBs, that we must remember that this limit is not applicable to the urban cooperatives. So if a female borrower is there, individual female beneficiary is there, who is having a loan up to 2 lakh per borrower, that particular individual will be categorized under the weaker section. Next, distressed farmers indebted to non-institutional lenders. The non-institutional lenders means those private money lenders who charge hefty rate of interest for every credit they make. So if you are a farmer who is distressed, why? Because you are indebted to this private money lender, and the rate of interest is very much high, then also you are a weaker section participant. Then distressed persons other than farmers with loan amount not exceeding 1 lakh per borrower to prepay their debt to non-institutional lenders. So when we talk about the weaker sections category, there will be certain privilege, fine, for these people, for these individuals who are in the weaker sections. This is the only privilege they have, that they can move out of this financial distress or the trap of indebtedness. So if there is a distressed person other than farmer, and they have a particular loan of, let's suppose, 50,000, which is obviously less than 1 lakh, then they can do what? They can repay this rupees 50,000 to the money lender from where they have received the money, and after paying the loan they will be given a particular limit which they can easily repay in for the institutional credit. Fine, the institutional credit will be provided in the form of a particular limit via which they can repay the loan. First, upfront loan amount of 50,000 will be given to the particular distressed person, and that distressed person will forward this money to the money lender, and after that whatever the repayment schedule is there for, made by the institutional lender, that will be fulfilled by the distressed person. Okay, so in total what we are trying to do, we are trying to have all the distressed persons, all the distressed individuals within the ambit of institutional lending. Then persons with disabilities are also termed as weaker sections, considered under the weaker sections. Transgenders as well as the minority communities as may be notified by government of India from time to time. Okay, so the 13 categories which we have just seen, you should remember, you must remember, I would say at least three. First is this one, the 2 lakh one, because wherever you find that particular number is given, the limit is defined. From there, IIBF asks questions. Right? So for artisans, village, cottage industries, individual credit limits do not exceed 2 lakh. That is important. Then we have individual women beneficiaries. For them, up to 2 lakh per borrower is the limit. And for the third important aspect, this is the first important one, then this is the second important one, third important one being for the distressed persons having the lending amount as 1 lakh or below. Okay. Now here, I have attached the screenshot of the categorization of small and marginal farmers, which is the first category under the weaker sections. So when we talk about the categorization, how is it done? It is done on the basis of operational land holding. And what is the definition of this operational land holding? It is defined as all the land which is used wholly or partly for agricultural production. Fine, this you must remember. It is used for agricultural production only and is operated as one technical unit by one person alone or with others without regard to the title, legal form, size, or location. So basically, the operational aspect is taken care of, and ultimately, this definition, this category, can categorize any kind of individual under this particular category if they have been operating on that particular agricultural land. So marginal farmer, we will say when the operational land holding is below 1 hectare. Small farmer when the operational land holding is between 1 to 2 hectares. Semi-medium uh, between 2 and 4 hectare. Medium operational land holding is between 4 to 10 hectare. Large farmers having the operational land holding 10 hectare and above. Then the most important topic of the entire chapter, from where the questions will not only be asked in IFS but also in PPB, in RBWM, and also in your CAIIB examination. Once you clear the JAIIB examination, then in CAIIB exam also this classification and the master direction of RBI, the latest one, must be known to you, because from here questions are asked by the IIBF. Okay, so categories, there are uh, four major categories which RBI has defined. First is the total priority sector, then we have the agriculture, then micro enterprises, and last is advances to weaker sections. So the total priority sector, here we have domestic commercial banks and foreign banks with 20 branches and above as first financial institutions category. Second category belongs to foreign banks with less than 20 branches. So all those foreign banks having the branches between 1 to 19 in India, they are under the second category. Third one is your regional rural banks, and fourth being your small finance banks. Okay, so domestic commercial banks, we normally say that they include RRBs and SFBs, but for the master directions of issued by RBI, you will say that RRBs and SFBs have their own category. Fine, they are not included here in the category one. Okay, so domestic commercial banks and foreign banks with 20 and above branches, that is the category 1. DCBs, excluding RRBs and SFBs, plus foreign banks with more than 20 branches. So for total priority sector, what is the obligation on the first category? It is 40% of ANBC or COB, whichever is higher. Fine. ANBC or COB, whichever is higher. ANBC is what? Adjusted net bank credit. Fine, net bank credit. And when you talk about adjusted net bank credit, how you calculate it? So pretty simple formula is there. When we talk about the journal formula, not the technical one, which we'll be learning in PPP, it is that the net bank credit, whatever you have, simply you need to exclude the bills rediscounted. Fine, bills rediscounted will be excluded from the bank credit, not net. Let me just erase it. So what happens initially, you have a bank credit. Being a bank, you will be having certain credit. So bank credit, exclude the bills rediscounted from here. Fine. Bills rediscounted from RBI, you will get the net bank credit. And in this net bank credit, you have to add the outstanding deposits in the RIDF. Fine, RIDF. Then you have to add the non-SLR bond yields, non-SLR. All these clubbed together, you will find the A and BC as the final number. And not only these, but the HTM category, the FCNR category, NRE deposits category, all those debentures, we will be factoring in those also. COB is what? Credit equivalent of off balance sheet exposure. Credit equivalent of off balance sheet, fine, which is not included in the balance sheet. That type of exposure we are talking about. And whenever such exposure is being discussed, we mostly say that it is in the form of non-fund based facility, NFB. Fine. So 40% of ANBC or COP, whichever is higher. For our exam, you have to know the numbers only. Fine. Nobody will be asking you that explain COPE, or for that matter, explain ANBC in IE and IFS. They will ask you from the, you can say, basics of your RBI master directions in IFS. In PPB, they can ask you the formula of ANBC. We'll be learning about that in principles and practices of banking. Okay, so 40% for the first category is the total priority sector obligation. For the second category, that is foreign banks with less than 20 branches, again 40% of ANBC or COB, whichever is higher. Out of this 40%, 32% can be in the form of lending to exports, and 8% to the remaining 8 categories. We have seen 9 categories are there in the priority sectors. Fine. So 32 in the export credit and remaining 8 to the others. Then we have RRBs as 75%, the obligation 75% of COB or NPC, whichever is higher, out of which up to 15% can go towards medium enterprises, social infra, and renewable energy. And the remaining 60%, they will go towards the remaining 6 categories of priority sectors. Then we have small finance banks. A very important point to note here is that now the obligation is 60% of ANBC or COB, whichever is higher. Mostly you will find that still the old data is there out in the open. But for our exam, always remember the latest data. It will be 60%. Earlier it was 75%. So mostly you will find this, which is wrong. Now it has been changed to 60% with effect from May, June 2025. Okay, so yes, this was it for today's session. If you want to have an elaborate discussion on unit number 4th, priority sector lending norms, then MSME, you can directly contact us on one particular number, that is 0981 and have your options which are available right now for the best course. You can directly call us on this number and our team of experts will resolve that particular doubt if you have. So Jab Cab Mahapack is the particular product we offer our students. We often prefer this product over the other batches. Reason being, because here you will get 3x validity and more than 79% discount if you utilize the coupon code, that is Y1003. And right now the time is apt for all the bankers because we are conducting the magical Christmas offers. The increment sale is live on our platform. Along with that, if you have not seen the 5 days, 5 gifts sessions which we are conducting regularly since 21st of December, then do watch them after the session is over, and you will feel that yes, something special is there for all of you. Fine. So let's conclude the class. This was it for today. If you have any doubt regarding the content which we have studied today, feel free to comment in the comment section. All the best.